Hey guys, hello and welcome back to Green Pips FX. And on today's video, I'll be teaching you guys on how to view price, how to look at price from a smart money point of view. Now, of course, I'm going to use this pair right here. So I'm on the UJ on the 15-minute chart, and this is where I'll be most focused on and teaching you guys and the rest, right? So first of all, we're going to look at price at a structural point of view, right? So based on structure, we have been bullish on this pair for like forever, right? Since, we've been bullish on this thing for months, right? Until this point here, when price just created this high right here, and then came down and decided to break this low right here. So at this point, we knew that price was gonna, go through what I call a reaccumulation schematic, right? So it's a bearish move meant to make a larger bullish move, right? So as you can see, price came down, broke this low here to make a lower low, right? Which came from this high here. So we started forming a series of lower lows and lower highs, right? So from there, price broke again, formed a lower low, which came from this as its lower high, and then finally this lower low that came from this as its lower high. But at that point, price had tapped this overall last down move before the up move, which I'd like to call an order block, right? So this was the overall order block, but I just refined it into this little guy in here. Now, as you can see, look at what price does when it reaches in there, right? So price comes in, right, just taps into this order block, right, with only a wick. That's a very strong sign of potential bullishness incoming in the market. So price taps and then closes above somewhere in here and then starts this consolidation move right here. So price drizzles around and look at what price does. So price makes this internal break right here, comes back down, of course, into an area of this order block, makes some more liquidations with these wicks, right? So this is simply inducement, right? And then we have this high being broken once more. Price makes this high here, comes in for extra mitigation, right, with this low here, giving us day traders some very good entry points in there. And then finally, we had this change of character and forming this high right here. So at this point, we had a low, right? An overall low with this wick and an overall high with this high right here. So we were pretty much sitting in a range of this low to this high. So I'm just gonna remove, let's just remove these brushes and see if we can remain with something very clean in here, right? So there we are. So we can just zoom in a little bit and mark these things. So we had this high right here, pertaining as an overall high, and we had this low right here pertaining as an overall low. However, you could, since this is just a wick and there's liquidations, but this high here particularly came from these lows, so you could use this as your low or this as your low. Any of those is pretty much valid. However, I do like to make that mitigation of my zone. So I'm going to go with this low here, which holds the overall order block or the demand zone that formed this high right here. So we were ranging from this high to this low. So this is the range that we've been sitting on for almost over a month now, right? So you can see this high was created on June 23rd, and today is actually Thursday, okay. So, it's almost a month now. So there we are. We had this high and this low. Now look at what price does. So the overall thing that we were expecting is for an actual continuation. Right? So at this area here, what is actually expecting for price to do at this area was pretty much a continuation, right? So price formed this low, this high low, right? Higher high, higher low, higher high. An overall expectation was, just for small pullback into this area here for mitigation, and then a continuation to target this as its next liquidity run. But price didn't do that, and what it did instead was breaking through this low here, which meant a change of character, right? Right? So with this change of character, we now knew that price from here was going to make a deeper retracement. So all we had to do is apply the concept of supply and demand. With that concept, we were able to identify a potential area from which price was actually going to go to on the long term, and actually that area could hold the price and strike a bullish move from there. So I have explained this concept from a previous video. So I like to analyze price in terms of legs, right? So we had, for example, right here we had a high which formed this short leg here into the low, a slight pullback, and then we're expecting another leg bearish, which is exactly what happened. So with this break right here, formation of this high from this low, so this was a first bullish leg. So what we were expecting in the community is a retracement and another bullish leg to come and take out this high, and particularly this overall high up here. Now notice what price does in here, right? So price now decides to make multiple reaccumulations and redistribution schematics, right? However, we were in a range of this high to this low here, but that doesn't mean that price has to come all the way down here for it to be able to go bullish and take out this high. No. So I know that this market is bullish, and I always stick with a bullish side. Right now, this is the thing that I see it costs a lot of traders, making them taking just stupid losses. Why? Because they simply want to hedge in the market. Now, hedging is not a very good thing to do. However, some people teach you that you can hedge the market. When you're a pro trader, you can buy in continuations and sell in pullbacks, but that's a pretty dumb thing to do, because nothing is assured in here, right? You do not have an assurance of a pullback, nor do you have an assurance of a continuation. So everything is pretty much anticipationary based. So with that being said, this market was bullish, and I always sticked with the bullish side. However, inside of this whole range in here, I never took a sell trade. Why? Because I know that the market is bullish, and I applied the concept of following price and trading with the trend. That's a very important tool and a very important factor towards a profitable trader. Always trade with the trend. So with that being said, I did take advantage of these changes of character and breaks of structure inside here. So we had price coming into this area of demand here, right? With this wick here, price came up, formed this high, came down, failed to break, came up once again, took some more momentum, and then made this move downwards and formed this area of an order block here. So with this being formed, I know that this was a simple tactic of creation and taking of liquidity, as since it's what price does best. Price or smart money engineers and takes liquidity always and always. So with that being said, price made this change of character here with the formation of this high here, and we had this area of demand in here. So price came back down, made this change, came back down once again, and as you can see from this area, we had some very good buys in here. However, we always target the highs as our next liquidity run. So after this high was taken out, price took me out at break even, which was also another liquidity sweep. So price broke off once again. I was gonna look for some buys in here. I didn't get a very good break towards the upside. So for example, if this low here was to make a high that broke this high here, then I would be able to look for some extra buys and go bullish, targeting this high first, and then this high second, and then the next highs. But that didn't happen, so no trades were taken in there. However, so price just decided to go into this overall okay, so as I was saying, right, so price just came into this area of the original order block, and from there price drizzled around, created some liquidity here, took that liquidity with this wick right here, and then triggered this up move towards the formation of this high. And from there I was now starting to be certain, just looking for very good opportunities. Of course, we had some very good buys in here, right? We had another buys in here, right? So price just came in, made this low after the mitigation of this order block here, created this channel of liquidity right here, came back down to take that liquidity, came up, made this change of character, came back down, gave me this entry right here, targeting the high, of course, and there it is. So this was like a almost a 1 to 5 RR trade. However, I did have some very good trades in here, in these areas here, and finally this latest trade off of this area here. So price just made this change of character, and then from there price came back down into this area of demand in here, which is the order block from the previous trade, and gave me this very good entry here off of the 5-minute chart. So here, this was the triple M entry methodology. So there was my entry. My entry somewhere there after the closure of some candles based on the triple M entry model, and we were able now to catch that buy. So firstly, the buy just came off, took this liquidity above these highs, and also came to break this high. As you can see, this breaker structure, and I did send another entry setup that price would probably make a retracement and then a continuation towards targeting this overall next liquidity run anticipation that came from this high here, which is the overall high. Now, with that being said, price did that, just that. So we had a retracement. However, price made a deeper retracement than my expectations. So I was expecting at this point that price would normally just come into this area or this area of demand and then probably go up, but price didn't do that. Price just made its way all the way back down into this order block right here, or demand, that caused the break of this structural high. And there we had it. So there we had it, some extra mitigation in here, and of course an entry off of the triple M entry methodology just at the closure of that green candle in there. So that was the entry, the stop loss below that low, and we were looking to target the highs, of course. So I just removed this trade. So there we had it, boom, right there. So we had the first entry with a total of 1 to 16 RR trade, and the next trade was a total of 1 to 21 RR, right? So those are massive risk to reward ratios. So this is how we apply the concept of following price and trading with the trend, right? So everything done in here is pretty much based off of the MMC footprint strategy that me and the guys in the Green Pips FX community use. And also, if you do want to get this level of knowledge, then you could just DM us on our social medias. You know, our DMs are open for registrations on the mentorship program, and you know, it is what it is, guys. With that being said, this marks the end of the video. Make sure you like if you did like the video, subscribe if you haven't, turn that bell button off notifications, and until the next one, guys, stay safe, have a nice trading week, and peace out.